Stocks plummet again, how low can we go? It was another wild day on Wall Street as stocks took yet another tumble. The tech-heavy NASDAQ index fell more than 2%, bringing it to near its lowest levels since the start of the year. The Dow Jones Industrial Average and S&P 500 also saw significant losses, closing the day with declines of over 1%. This marks the fifth time in the past 6 days that stocks have declined sharply, leaving investors to wonder how low can the market go? In this blog post, we'll take a look at the recent sell-off and discuss some of the potential consequences for investors. The Dow and S&P 500 both closed lower today. The Dow Jones Industrial Average closed down 1.34% or 411 points, bringing it to 30,135. The S&P 500 also closed lower, ending the day at 3,664 after a 0.96% drop. This marks the second straight day of losses for both indexes, and brings them below their recent highs from late February. The NASDAQ, however, has had an especially rough time in today's session and is currently down more than 2%. It's now just 1% away from its 2022 lows of 11,856, which it reached in late January. This tech-heavy index has been particularly volatile in recent weeks, with losses and gains coming and going almost daily. The NASDAQ is down more than 2%. The tech-heavy NASDAQ index dropped more than 2% on Thursday, bringing it down to levels not seen since February of this year. This is the second straight day of losses for the NASDAQ, which has been especially volatile in recent weeks. The drop puts the NASDAQ index down 5.6% from its high back in February, and some analysts are predicting that the market could continue to fall as we head into the summer months. The tech sector, which includes some of the largest companies in the world, has been one of the worst performing sectors during this pullback. Investors have been watching the NASDAQ carefully in recent days, as this index has been one of the key drivers of stock market performance in recent years. A drop of this size could be a sign of trouble ahead for the tech sector and the broader markets, and it could be a sign that investors are starting to move out of tech stocks. This is the second straight day of losses. Stocks were hit hard on Wednesday, with the Dow Jones Industrial Average closing lower for the second straight day. The NASDAQ Composite fell 2.2% to a new low for the year, dropping below its February high. The S&P 500 also closed lower, down 1.5%, with all 11 sectors falling into the red. The tech-heavy index has now lost more than 5% from its highs in February and is nearing its 2022 lows. The market sell-off was driven by concerns over rising bond yields and their potential impact on corporate earnings growth. The 10-year Treasury yield hit a one-year high of 1.77%, making it more attractive for investors to move away from stocks and into bonds. Investors are also concerned about inflation and the possibility that it could force the Federal Reserve to raise interest rates sooner than expected. This would put further pressure on corporate profits and make borrowing more expensive for businesses and consumers. The outlook for the stock market remains uncertain, with analysts divided on where it will go from here. Some are predicting further losses in the near term, while others see a possible turnaround in the second half of the year. For now, investors will have to wait and see how the market reacts to the changing economic landscape. We may be facing a potential recession, but there are things we can do to get through it. The stock market has been volatile lately, but there are things you can do to prepare for the next drop. If you're feeling nervous about the economy and your finances, try making adjustments in your plan. You might want to take on a part-time job or cut back on unnecessary expenses for now until things settle down again. If necessary, set aside some money for rainy days as well. As long as we keep up with our savings goals and continue paying off debt every month, or whenever it's available, we'll be able to weather any storm that comes our way, no matter how big or small it may be at this point in time. We need to keep an eye on the stock market and change our plans if necessary. It's important to keep an eye on the stock market, and change your plans if necessary. The market can change quickly, so it's important to be prepared to adjust if things are not going as planned. Don't panic if the market drops, but don't ignore it completely either. You may need some extra cash for unexpected expenses or emergencies down the road. Conclusion: stock market crashes are a part of life, and we should be prepared to change our plans accordingly. If you are thinking about investing in the stock market, it might be best for now to stay away from it until everything calms down again.